Okay, let's talk about the share market. You hear about it all the time, right? Flashing numbers on a screen, big risks, even bigger rewards. But what is it really? We're going to break it all down, super simple, in the next 5 minutes. Let's do it.
I bet you've heard the stories. A friend of a friend or some crazy headline you saw online. Someone makes lakhs of rupees from the share market. It sounds almost too good to be true, right? Maybe even a little intimidating. And it always leaves you with that one big question.
What is this thing? How does it actually work? Well, that's exactly what we're going to figure out.
So, let's start at the very beginning. What is the share market? Forget all the complicated jargon for a second. Let's get right to the core of it.
At its heart, it's pretty simple. It's a place where shares of companies are bought and sold. You can think of it like a giant flea market or a vegetable mundi, But instead of buying and selling vegetables, people are trading tiny little pieces of companies. That's all it is, a huge organized marketplace for company ownership.
Okay, but that just brings up another question, doesn't it? What in the world is a share? To really get this, we have to understand what that little piece of paper or, digital entry actually represents.
So what's the real meaning of a share? Believe it or not, it's not some super complicated financial thing. It's actually a pretty simple idea. And it all starts with one thing, a company that wants to get bigger.
So picture this. There's a company, and it needs money to grow. Maybe it wants to build a new factory, or launch a cool new product, or just hire a bunch more people. To do any of that, it needs cash, a lot of it. We call this capital. So the big question is, where does it get that money from? Well, instead of going to a bank for a huge loan, the company can do something really interesting. It can take the entire company and slice it up into millions of tiny, equal parts. And then it sells those little parts to the public, to people like you, me, anyone who wants to buy them.
And each one of those tiny little parts of the company, that's what we call a share. It's that simple. So the most important thing to remember here is that a share isn't just some number blinking on a screen. It's real. It means you own a tiny little slice of that business. So think about it this way. If you go out and buy just one share of a massive company like, say, Reliance Industries, you've actually become a part owner. Yeah, a very, very small owner for sure, but an owner all the same. And if that company does well, if it grows and makes more money, then the value of your little piece of ownership, your share, goes up too. Now, obviously, you don't just go to a street corner to buy these shares. This whole process of buying and selling happens in organized, official places we call stock exchanges. And here in India, there are two main ones you've probably heard of, the Bombay Stock Exchange, or BSE, and the National Stock Exchange, the NSE. Okay, so you buy a share, you become a part owner. That's cool. But how do people actually make money from this? Well, there are basically two main ways to go about it. First up, you've got what's called trading. Think of this as the fast-paced, short-term game. It's all about buying shares when the price is low and then selling them pretty quickly when the price goes up. The classic buy low, sell high. Then, on the other hand, you have investing. This is the long game. This is about finding good, solid companies that you believe in, buying their shares, and then just holding on to them for a long time. We're talking years. The idea is to benefit as the company itself grows and becomes more valuable over time. All right, now we need to talk about probably the most important question of all. We've talked about how you can make money, but is it risky? Let's be super clear about this.
This is the one question you have to ask before you even think about putting a single rupee into the market.
The short answer, yes, absolutely. There is no way around it. The share market does involve risk, making money is never ever guaranteed, and you can definitely lose money.
And here's why. Remember how your share is a piece of the company? Well, if that company starts to do badly, if it's not making sales, if it's losing money, the value of the whole company goes down. And that means the price of your share can go down too. It's that direct link.
So how do you deal with that risk? The key isn't guessing or just following some hot tip you heard. The only real way to manage it is with knowledge. It all comes down to a few simple steps. First, get the right information. Second, you have to do your own research on the companies. And third, and this is the big one, only invest after you really learn and understand what you're putting your money into.
Okay, so we've covered a lot in a pretty short time. So what's your next step? Let's quickly wrap up with the main takeaways. So here's what you need to remember. First, the share market is simply a place where people trade ownership in companies. Second, a share is just a small piece of one of those companies. Third, you can try to make money through short-term trading or through long-term investing. And finally, and this is the most crucial part, yes, there is risk, and the best way to handle it is by learning and doing your homework.
Look, at the end of the day, knowledge is your first and most important investment. Before you ever think about investing your money, you have to invest your time in learning. That's your biggest asset, period. So the real question isn't, hey, which stock should I buy? The real question is, what's the next step I'm going to take to learn more?